We were talking yesterday before the call about the idea of content spend sending shares lower. And it's like a story that we could have told about Netflix a dozen years ago, because this is always, apart from members, and we don't get that number anymore, that's what in the past has moved the company's stock. Is that what happened this time, or is it something different?
There are a few different elements here going on. So, Netflix does give the engagement numbers now. And, after not giving subscriber numbers for most of the year, they did give their subscriber numbers. But the subscriber numbers are really where we expected them to be. There was no surprise there. I think, there was some disappointment in how much advertising revenue that Netflix was able to squeeze out of a quarter as big as Q4, when you had, all those live events, including NFL games on Christmas, some boxing matches, and of course, Stranger Things. And you had a lot of, people coming onto the service and a lot more engagement around those events. Netflix should have been able to get some pretty significant advertising revenue. They did get a decent amount. Advertising revenue did grow 2.5 times year over year. And they do expect another doubling in 26 to about $3 billion. And that's satisfactory, but it's not, exciting just yet. There's still a significant growth opportunity for Netflix in advertising. And I think the hurdle so far has been just that they haven't had the data stack and the attribution available for advertisers significant enough for them to really, do all of the campaigns that they would like to do. They have great alternatives right now across social media and other connected TV items, but Netflix is really catching up on this. And I do think that they'll be able to exploit that opportunity in the coming year or two.
So advertising being the big surge, Alicia, when it comes to boosting the top line, the revenue line?
Yeah, I think that's their biggest opportunity in the coming years. 26 is the first year where that's really meaningful. It's a meaningful contributor to its growth opportunity. And the $3 billion mark that they set for themselves, they can easily surpass that if they get all of the pieces in place. And that excessive content spend, or what might look excessive content spend relative to the engagement, will look a lot more reasonable if a lot of that engagement is on the ad tier. Now, they said that they're planning to do some price increases in the year. And I think that's going to be mainly on the premium tiers, trying to urge more of its users over to the advertising tier, which is significantly cheaper. If they get a lot of that engagement on the ad tier and a lot more advertisers in front of them, that results in profitability.
The $82.7 billion deal for Warner Brothers Discovery. Predict this for us. Does Netflix get these assets?
The regulatory process is going to be long, drawn out, and very difficult.
Why do you think that in this case?
Yeah, well, there's two different sides of it. On the one side, there's the consumer side. It's going to be hard for Netflix to argue that, the likes of YouTube, billions on YouTube are real competitors. You do have some subscribers, but it's a significantly lower portion. Not all media is going to be, considered a competitor. If you only have real competitors in there, Netflix does have significant market share and will have quite a bit when they have HBO. On the other side, it's content as a content buyer. It's going to consolidate power pretty significantly for, against producers of content. And so it'll give Netflix almost too much, collective power against those producers and how much they'll spend on content. So it does diminish some power in Hollywood potentially. And, the prosecutors will be able to argue that.
Alicia, you've got an outperform. You've had an outperform for a while. I think you've moved around the target price. Right now, you're looking for about 115 a share on Netflix. So that's some room to the upside. I mean, the stock right now trading just under $85 a share. Is it, though? We just talked about, you stressed that the revenue is certainly going to be a big opportunity for this company, ad revenue growth. Is that what gets it to the target, or are there other things? Is it also the completion of the deal? And if that deal doesn't happen, then what? What does the growth story look like for Netflix going forward? Is ad revenue enough, or do they need that deal to help with that growth in the ad revenue?
So my price target does not include Warner Brothers at this time, and it won't until the deal closes. Right now, my assumption is that they're going to just continue operating as Netflix, at least for the next, year plus during the regulatory process. So my $115 price target is 1 year out, includes only Netflix and its own, internal opportunity with ad revenue growth. And so, should that deal go through, that will, significantly improve Netflix's ability to leverage its ad stack, which by then should be, absolutely booming. So I do think there's a lot of upside opportunity with or without Warner Brothers at this point.
Okay, what happens though if a competitor gets it? You said there's still a lot of upside, even if Netflix
content gets more expensive.
Okay.
Yeah. That is the issue. Netflix has been making a lot of partnerships and content. They made their one with Sony recently. Of course, they have their content deal with Warner Brothers, and they've seen how successful that content library is for Netflix on Netflix. And so owning the content makes a lot of sense. It'll save them a lot of money on those content costs. If somebody else gets the content, it could potentially be more expensive, but Netflix buys that content, plenty of content from Paramount already. So, it's just a matter of, will Netflix continue to spend this much on, procuring content through licensing deals and then producing its own content, and a combination of that and a combination of international content as well. It certainly can. It just would be a little bit more profitable, especially if they're able to leverage that content against a global base that utilizes advertising.
Okay, so years ago, Netflix said all we're doing, is sending DVDs to people, and that's our business. Yeah. Then they, Quickster and the whole spin-off, and that didn't end up happening. But then they're like, okay, now all we're doing is focusing on on-demand streaming. We're never going to do sports. We're never going to do anything live. They threw all that out the window. They're doing everything right now. They're doing advertising. They used to say we'd never do advertising. What is left for Netflix to do, at least from a content perspective, if they're doing games, if they're doing sports, if they're doing these live one-off events, if they're doing the live not one-off events and getting actually rights to broadcast sports, if they're doing podcasts, what's left?
Yeah, there's a lot left in terms of gaming, cloud gaming. They have a really big opportunity there as cloud gaming becomes more pervasive on connected TVs. They have a good opportunity just given their global base and the number of gamers out there. They can do a lot with that. I think they could become a really important platform for gaming, similar to, some of the consoles. They can operate as such, licensing in a lot of really quality, high quality gaming content, and then leveraging their own IP as they see fit. There are a lot of other opportunities in sports. To your point, they don't have to, they can do one-off events. They can do, WWE, which has been really successful for them. They're going to do, the baseball in Japan. I think that's a really important step for them. And it doesn't have to be global. It can be localized. They can also leverage their global base to bring sports that are not big in certain regions to those regions and create a larger fan base around the world. Take Gaelic football to the U.S., for instance, that could work. There are a lot of different opportunities within those. I think podcasts, the whole idea is to have content that will appeal to every one of their subscriber households and keep everyone engaged. And however they need to do that is what they're going to do.